Step into the fascinating realm of industrial metals, where steel prices fluctuate and market indicators are the pulse of an ever-evolving industry. Welcome to Cup of Joe, the metal podcast paying homage to our founder, Joseph T. Ryerson. Settle in, savor a cup of Joe, and let the conversation begin.
Hello, everyone. Welcome to another episode of Cup of Joe. We're coming here a little late in January. Normally, we're at the beginning of the year or beginning of the month this year, in the beginning of the year. But now we're coming about mid-month because we want to do a mid-month check-in, see how things are going, and then also preview a more enhanced Cup of Joe version for February. And before we get to that, I'd like to introduce my partner, as always, Nick Webb, our Director of Commodities Hedging and Risk Management. Nick, coming off a big victory last night as we're recording this, Ohio State just pulled it out.
Man, I was contemplating wearing my jersey, but I thought that might get a little annoying. You and I were actually talking before we recorded. It seems like the vast majority of the country is not actually a fan of this result, so I'm going to keep it a little tame today.
Yeah, I was surprised the hatred, the vitriol for Ohio State. You know, I got a buddy who was like, no way. You know, just I've got some friends that are Notre Dame fans. We're not too far from South Bend, so I had a lot of folks on my end rooting. I was pulling for you, man. I was pulling for the Buckeyes.
Hey, it's always loneliest at the top.
Yeah. And we don't talk.
By the way, I think there's a congratulations to you as well with your alma mater, no?
Yeah, we don't talk about it much. I went to North Central College here in one of the suburbs of Chicago, and North Central College's football team won the Division III national championship in early January. It's actually their third in the past 5 years. So I don't like to brag too much, but you know,
love it. You took down the powerhouse from Ohio and Mount Union as well. Yeah,
an Ohio State team, by the way.
Yeah,
or Ohio,
yeah, exactly.
Ohio team. Yeah, so that's not, you know, nothing as triumphant as Ohio State, but hey, you know, it's Cup of Champions this month. We've got national.
That's
champions.
Right, Cup of Champions. Ends. I like that.
Yeah, I love it. So as I said, we're gonna have an enhanced version, if you will, and a longer episode of Cup of Joe on February 6th. It'll be live again. Our CEO Eddie Lehner is going to kick things off, give a little bit of talk about the market. That's always can't miss TV when he talks. Oh, yeah. And then Nick's going to go give your commodities update, do maybe a deeper dive into the economics circle, and then we'll be joined by three of our product managers. I believe they've all been on the show before. Jeff Notice for aluminum, Mark Gross for carbon steel, and Keith Kessler for stainless.
Excellent.
And we'll have a chance to ask everyone. You'll have a chance to ask all four of the minds on the panel, including my dog Buster.
Love it.
Ask them questions, and why don't you get over to your thing while he gets his barking out?
Let's do it. All right. As we always do, I have to cover the safe harbor provision. These are the opinions of Nick Webb and Mike Carrazzo. These are not the opinions of Ryerson. We've got a slightly more condensed version here this month that we want to run through, and then we'll be back here in just a couple of weeks for the much broader Cup of Joe and macroeconomic updates. But you know, given the fact that we're fresh on the back of inauguration with the new administration, you know, there's certainly a lot of things we want to be cognizant of and want to be aware of, because some of these things, while they may be binary in nature, they either do happen or they don't happen. The implications for metals markets can be quite severe. So we want to at least make sure we tee some of that stuff up. So let's go ahead and hop into it. First things first, we are actually seeing a little bit of what I would say is forward-looking optimism within the manufacturing sector. What we're looking at here is the Institute of Supply Management, their new orders survey. And what I like to point out with colleagues and customers on this chart is, you know, going back to 2010, you can see that both on a magnitude basis and on a duration basis, this ISM new orders data has been pretty severely in what I would say is recessionary territory. Both, again, basically a 2-year time span. We've seen a lot of deflation in metals markets over that time period. We've seen some softening of shipments over that time period, but ever so slightly. And 1 month doesn't make a trend, but it's something we want to keep an eye on. Over there on the far right-hand side, we've moved back into positive territory. So, you know, perhaps this is something that we've got a little bit of a tailwind. as we start off the year in 2025, and maybe we start to see some shipments pick up, come later Q1, early Q2. So some early indications we're seeing some optimism within the manufacturing side of things, which I would say is a very welcome change. Similarly, when we look at prices, this is the Bloomberg Commodities Index. So again, this is going to include crude oil, natural gas, industrial metals, precious metals, and agricultural products. And again, you can see in the data for the last 2 years, we've seen essentially nothing but deflation in these commodity markets. And some of that was actually the Fed's goal to bring inflation and costs of things down. But we are, as we look again over on the far right-hand side, we are beginning to see what looks like stabilization and maybe even a little bit of momentum to the upside. So something, we certainly want to be cognizant of, because this would be a change of trend versus what we've seen over the last 2 years. And I think it's worth noting that just in the first few weeks of 2025, we've seen crude oil prices go from high 60s to mid to high 70s. We've seen natural gas prices obviously very well supported, given the fact that we're seeing single digit temperatures across much of the Midwest. Those are certainly beginning to lift some commodity markets. So again, something that I think we want to keep an eye on: stabilization to maybe a slight skew upwards in broad-based commodity markets. Trend we want to keep an eye on for sure.
So these first 2 points really show an optimism in manufacturing starting off, and you talk with manufacturers on a pretty regular basis, our customers. I mean, are you getting the same sense when you're talking to them?
Yeah, and it's a great segue into this next chart, which is small business optimism. So again, this is just a survey. This is not actual shipment data or dollar-based data. But the gut feel, the animal spirits, at least within the data we watch, is suggesting that the animal spirits are alive and well. And perhaps not coincidentally, this type of move that we're seeing at the moment, and it has been taking place essentially since the elections. Perhaps not coincidentally, the last time we saw this type of move was exactly 8 years ago when Trump was coming into office for the first time. So, we'll see what that amounts to. But yeah, to answer your question, as I've traveled a bit around the country already, visiting with some customers, and I will say that those animal spirits, those gut feels, there's some optimism out there. There have been a number of big names and executives who have come out and kind of said, it looks like this is, at least on the surface, going to be a very pro-business, pro-America, maybe pro-North America administration, which I think, at least within the manufacturing space, that's appearing to be viewed pretty optimistically thus far.
Yeah, it'd be a nice shot in the arm, right? I mean, I think people just want to feel good about anything, right? And they're latching on. And I think there's a lot of optimism, a lot of headwinds, as you say, going into the year. And you and I recently spoke with a manufacturer about the supply chain, and he seemed pretty optimistic. A wave, and it's an additional episode. You can take a listen to our conversation, but he seemed pretty upbeat about how things are going as well.
Yeah, agreed.
Yeah.
And on that topic with regards to the administration, I'm not going to dive through all of these, but I pulled this yesterday on Inauguration Day from the whitehouse.gov website, because I want to stay on the pulse of what executive orders may be coming, what are going to be the key pushes in terms of priorities. And over there on the right-hand side, those are the key priority or initiatives that the Trump administration is saying they want to focus on. So things like Make America Safe Again. Whether we like it or not, that's likely going to center around immigration policies, border policies, make America affordable and energy dominant again. Already we're 1 day in, and already there have been some land leases that have been opened up for energy drilling, energy activity, even some waters, ocean waters that were previously banned for deep water drilling that are being reopened. So, it's fairly swift, some of these actions that are taking place. Drain the swamp, bring back American values. Those are a bit more broad, but the point of this slide is really just to say that as we go into 2025 or deeper into 2025, we're going to see a lot of volatility. I mentioned at the onset of the podcast, but with just the swipe of a pen or the keystroke of a tweet, we could see things that come out that move markets 15-20% in an instant. And we'll talk about a couple of those things that we certainly want to keep an eye on.
What about the acquisition of Greenland?
Well, interestingly enough, it seems like there's somewhat of a cordial discussion actually taking place there.
Yeah, that's
Pretty
amazing.
interesting stuff. Yeah, we actually had some leadership meetings, and we had a military general come in, and he brought up a really interesting point about Greenland, which was that, from a geopolitical standpoint, if there was ever to be a missile shot from another
Hmm.
country, it likely isn't going to come horizontally around the world. It's more likely to go over top of the poles. And who better to intercept something like that or be able to protect from something like that than a Greenland? So, kind of an interesting point. And I
Yeah,
guess you could probably make the same argument about Canada, that they're, for lack of a better way of saying it, kind of the buffer zone between those things.
right.
So maybe not a coincidence that they're also being discussed in those similar type negotiations.
And there's a metal play,
But
right?
it's
Because there,
wild times.
yeah, and there's a metal play because there's a lot of precious rare earth metals, right, under Greenland. Obviously, some oil reserves. So we
Yep.
could be it could be a cup of Joe play there if
Yeah, I mean,
we acquire
Greenland,
Greenland.
Canada, Alaska. Yeah, I mean, there are a
Yeah,
lot of untapped things that at least up to this point, have been somewhat untapped, and maybe that is a trend that we're going to see change a little bit in this administration.
yeah,
With that being said, this steel markets are really remaining mostly the same. So I'm not going to spend a ton of time on this, but basically the theme is both Chinese and European steel prices still pretty heavily under pressure. We're beginning to see some stabilization in U.S. sheet prices, hot roll, cold roll, galv, and a little bit of upward movement. We did in the last 2 weeks. We've seen scrap prices tick higher by about $20 per metric ton. That should provide a little bit of a cost push, support for domestic steel markets. Now, are we going to have further protectionism? That's one of those binary risks that, again, with the stroke of a pen, we might see blocking off of Canada or Mexico steel imports. That would have an impact on supply and demand conditions. We don't have anything like that just yet, but certainly something we want to keep our eyes open for. There has been some suggestion that come February 1st, that could be when we start to see some of these headlines relating to tariffs, but I guess a little bit of good news is that thus far, there hasn't been like this knee-jerk reaction from the new administration to say on day one, we're doing 25% tariffs across the board. It looks like they're taking a more, this may be wishful thinking, a slightly more pragmatic approach to, get my experts involved. I want to hear them out. They're going to put together a plan, and we may learn a little bit more about tariffs here in the next couple of weeks. Maybe by the next time we get together for a cup of Joe.
yep.
Now, the other place where there's this binary risk is in Midwest premiums. I think we've talked about this in prior Cup of Joes, but there is a risk that Canadian aluminum could get tariffed. And the reason why I specifically reference Canada is because about 70% of their imports, 70% of aluminum being imported in is coming from Canada. And, that's a pretty meaningful number. And if it is to get tariffed, say 25%, just to do the quick math, if we've got LME aluminum ingot pricing at $1.10, if you slap 25% on top of the Canadian aluminum ingot, that immediately causes premiums to go up by 30 cents, 25 to 30 cents. So we could see premiums going from the low 20 type cent range all the way up towards 50, perhaps. Now you can see I highlighted the futures curve there in that red box. And that's basically where the market is forecasting, because you can buy or sell these markets. That's basically where the market is forecasting as of today and yesterday. And I would say the market is basically pricing in 20% odds of that tariff going into place. I tend to lean in that camp as well personally, just because I don't think rampant and rapid inflation in the aluminum industry, for canning and things like that. We don't want the beer makers going and protesting on DC, but that is a risk. It could go in place, or it doesn't go in place. And I would say that binary risk, unfortunately, is one that we don't have insider intel on. It could either take Midwest premiums all the way up to 45, 50 cents, or they could quickly jolt back down to somewhere closer to about 20 cents. And we won't really know until really the rest of the nation knows. That is an area that we want to keep a very close eye on.
Interesting. Yeah, and that's the area you have circled in red.
That's right. Yep.
Red circle. Yeah. Okay. Wow.
Yeah, so like spot Midwest premiums are trading right around 23.5 cents. So there's already about 4 cents or so of premium being built into the curve. So there is some risk that the market is pricing in, but it's obviously not pricing in the full tariff risk. Otherwise, they would be significantly higher. And then last but not least, and we will spend a lot of time on all of these in much more detail here in 2 weeks. But nickel has been, the most beaten up of all the bunch within the industrial metal space. You can see just over the last 2 years, basically nothing but inflation. There's been a swift amount of volatility as well over the course of 2022. But, we've gone from $15 a pound back in 2022 on a fairly consistent basis, all the way down to where we are right now, which is hovering either side of $7 a pound. Now, this might be a bold call, but I think I'm beginning to sway my skew in the nickel market to say I think we're nearing that bottom. We're nearing that area where enough pain is being felt that I think some of the production will get rationalized and come offline, and hopefully better balance supply demand conditions. So, I'm not calling the absolute bottom, but I think we're near. We are certainly getting closer than we've been for the last several years. So I've got a few more slides and charts and pieces of data that I'm going to run through here in a couple of weeks that'll support some of that theme. But we're just giving you a little bit of the teaser, so you tune in for us here in a couple of weeks.
Yeah. So maybe some reversal of trends that we saw in 2024. So some of this, nickel had a really tough year. So sounds like a little some optimism as we head into the new year.
Yeah,
and what that might come.
Yeah, and I didn't provide this today, but I probably will here in a couple of weeks. If you look at like stock performance, so equities, stocks, over the last 2 years, it's a very similar story where you have kind of the haves and the have-nots. You have certain industries like information technology, communication services, your big Mag 7 type names, NVIDIA, that have just performed phenomenally well over the last 2 years. You're talking up several 100% in some cases. And then you have other industries like energy, like materials, industrials, that have just been a bit more mundane for really the better part of 2 years. And there's just this massive spread in between the two. And I don't want to give too much of a preview, but I actually think we're going to see in the next year or two, maybe the next year and 2 years out, a reversion of those themes. I think getting back to basics, getting back to our core competencies, natural resources, probably some nearshoring. I think there are going to be some beneficiaries that we didn't see over the last 2 years that we will see over the next.
How have the foreign markets responded to this inauguration? Right, or is that have a big push on foreign manufacturing, or is it does it give a boom because of the, what or what not, like what really drives the foreign markets?
Yeah, in terms of supply chains and manufacturing in general, these things aren't going to flip on or off overnight, unfortunately. Yeah. So, if there are tariffs put in place, if there's protectionism in place, or if there's just a general theme of nearshoring, over time, I would say that's going to create excess capacity in other parts of the world as it transitions here to the United States or North America. But again, that's not going to happen overnight. But that could be a longer term trend for sure.
Okay. So previewing for what's to come here in a few weeks, we'll have a little bit longer cup of Joe, but we figured we don't want to go too long. A lot going on in order to take a month off and not update what's going on in the marketplace. So optimistic, if I can talk, start to 2025, and should be another hot ride.
and hopefully between now and the next 2 weeks, we're going to have a whole lot of tweets that we can examine together. I can't wait.
Yeah. Well, TikTok too, right? So
that's right.
Yeah. A lot of people. It was, I forget who I was listening to, but they're like, TikTok was like the kid who threatens to run away, but just goes to your neighbor's house, and he's like, comes back 14 hours later. Right? Yeah.
I love it.
All right, Nick. Good talking to you as always, and
we'll
see you soon.
Thanks. We'll see you.